Hey, folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Thursday, October 11th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, taking a look at the market right now, we have a market that is slightly higher. However, the markets have sold sharply off the highs of the day, and that has to be a concern to any bulls out there. Here we have had consecutive down days in the market. The market this morning rallies on the aspect that a jobless claims number came in much better than expected, and the market pushes up early only to give back a majority of the gains again. Right now, the S&P's up 3 points, Nasdaq's up 2, Dow's up about 10 to 11 points, and again, that's barely positive on the day. In addition, look at the fall today. If we're just talking about technicals on the chart, you can see the market fell below the 20 and the 50 MA right here and is now consolidating. So this 50 MA here in 20 is going to act as resistance. Now, there is a chance it can get back above, but again, it's going to have to fight through that level. You never want to see the market or any stock come through key levels like that, because it definitely puts it in a position where it's having a little harder time rallying back above. It's basically like if you were to come down into the basement and close the door, the trap door, and then you're trying to push through it again, you have to still open that door to get through. You just can't walk right up. All right, so in any case, that's what we're seeing here today. Again, market's fading just up 33 cents on the spiders. One of the main reasons for the market fade can be looked at to Apple. AAPL is having a lot of trouble today. This morning it gapped nicely higher and basically fell straight down. Now it is rallying off the lows, but it's still down almost $9 on the day. Not a pretty showing on Apple whatsoever. All right. Aside from that, I mean, there's some weakness also in Amazon, which is why the Nasdaq's the weakest index here. And here's Amazon trading lower. But aside from that, most other things are positive. For instance, I'm seeing right now we have Google up $7. We have JP Morgan, Goldman Sachs, Chevron, Exxon all higher on the day. So again, we are seeing stocks mostly across the board doing well, except for a couple key places like Apple and Amazon. Now, a few other factors here, folks, that I want to discuss. First of all, the market as we inch towards the election. I do think there's a little bit more downside, but it's very limited. I think the spiders can possibly go to about the 1400, or I should say 140 level on the SPY, and that's most likely it before the elections. After the elections, different story. A lot will have to do with the fiscal cliff and the agreements made. If we fall off that fiscal cliff, you could look for markets getting slammed. If we somehow can stay above and get a deal done, you could see the markets back to the 52-week highs. So, again, that's going to be a big player after the elections. Nothing's going to get done before, and therefore I don't think there's a lot of downside nor upside in the markets. Most likely, again, we have a 3 to 4 point down move, which is most likely will happen before, and that's on the SPY. So that's not that much. It's like, I don't know, less than a couple percent. But bottom line is, yeah, it's about 2.5% there. But bottom line is, again, that's your downside risk. Your upside risk is minor as well. Your reward, I should say, on the long side, very, very minor. I would say, maybe you trade back up here to the 147 level into the election. That would be about it. Even that, I find a hard time believing that we'll get there. Okay? So that's what we're seeing there as of now, folks. Looking at a couple other interesting factors here. The dollar continues to be flat today, down 4 cents on the UUP, but very flat action intraday, which is, again, an interesting factor, the fact that the markets have come in without the dollar pushing up. Then taking a look at the gold chart, up 51 cents, but that's come off the highs as well. And the SLV, same general chart, off its highs, but still slightly positive on the day. Oil today is up slightly, but again, just like the other commodities, it has come off its highs. All right, let's take a look at a couple other stocks out there. Let's see what levels we can find to trade this afternoon. First, let's take a look at Google. Now, Google, again, has faded off its highs, had a very nice push early. Notice how it went right to the 200 MA. Since then, it's bounced around but come down. Your big levels on the day, obviously the 200, but you've already pierced it, so your double top is your next scalping opportunity on the long side. For a long play, so again, this would be a short right up here if it gets there. On your long side, to be honest, it's going to be down here. There'll be a minor level here, but at this point I wouldn't trust it since it's so close to gap fill. I would look for gap fill. If this thing could fill the gap, you probably get a very solid bounce, and I repeat, that's a very solid bounce. Taking a look at Apple, what levels do we see on Apple here? Apple again bounced up into the 20 MA pulling back a little bit here. On the downside, if this were to continue to fall, the obvious level is right down here. If by chance you can get down here, this is a great level on Apple. It's around the 624 level. You will get an intraday trading bounce there, no doubt about it. On the upside, where would you short this? To be honest, it's a little tricky. If we spiked straight up into the 50, you probably get a minor pullback there as it coincides with this pivot low right here. But the real big level is going to be the 200 and then double top. So 200 right here, double top right there. Those are your two main levels. All right. Let's see what else we have here, folks. Let's take a look at Amazon, which is, again, down on the day, AMZN. Getting a little bounce now. Again, notice how it gapped up today into the 50, just like Apple gapped up into the 200. This gapped up into the 50 and then came right off. But it is getting a little bit of a bounce. Even the market's getting a little bit of a bounce these days as we are seeing it float up. It's been a nice, solid fall on Amazon here from highs of around 264 all the way down to about 242. That's a 22-point drop. The big question is, where is this headed? The obvious answer is right here. You want to be a buyer for a bounce on Amazon? This is your level right here. All right, it's a no-brainer level, folks, no-brainer. So if it falls straight down, let's call it at 239. We'll give it a round number. It's really $1 on either side, but 239 is your level there, folks. Gets there, that's your money shot right there. All right? You should be able to pick up probably a $5 to $7 bounce off of that level, my guess, over the course of a couple days. Taking a look at JP Morgan Chase. JPM's been strong lately, guys. And again, you can see even with the market coming down, JPM's been able to fight up until today. And you may have a nice little reversal here. I love the gap up push and then the reversal here. We're hovering on the 50 MA. So there's support here on the intraday. If this were to fall, look for this area. This is the perfect area for a scalp long today. Gap fill 200 MA. Gap fill 200 MA at a price of 41.77 currently. That will be a nice long if it comes down into that level. On the short side, I see nothing good unless it goes to double top, at which point you probably get a little bit of a pullback off the double top. All right, let's see what else we have here on Goldman Sachs. We'll take a look at. Yeah, Goldman's hanging in there a lot better than JPM. Even though this is inside bar bearish right here, it's above the 20, so you wouldn't be looking to short it, obviously. It would be a bad position size there or a bad position angle. Shorting-wise, let me just take a look, zoom out a little bit here. Yeah, I mean, we're on uncharted territory, really. It's interesting with Goldman is that we're kind of hovering right above this or right around this pivot high right here. So short-term on a larger macro scale, this is the resistance area. On a daily, if it closes above, that's probably bullish. If it closes below, it could be bearish. On an intraday trade-wise, I don't see anything on the short side yet. On the long side, if it fell into the 50, you'd have support right there. And then gap window and ultimately gap fill 200 down here would be your key levels. All right, so those are your general levels right now on the stocks that we just went over. Just checking back in on the SPY. You can see the SPY is trying to bounce, but now it has to fight through those 50 MA and the 20 MA, which is going to be very, very tough. Other than that, there's a couple stocks moving here and there. It's been an okay scalping day. Unbelievable scalping, though, really, over the last month or so. It's been an amazing day trading market. All right, have a great afternoon. Come join us here at InTheMoneyStocks.com. Take the Research Center if you're an investor or a swing trader, or if you're a day trader, come join us in the intraday stock chat. Take care.